Hello and welcome. You tuned into Market Fatafat with me, Ankita Saxena, and with me is Akshay Bhagwat. In the next half an hour, we'll take you through all the top buzzers in the trading session today, either on the back of news flow or on the back of technicals. But first up, let's take a look at how the market is shaping up. It is turning out to be a terrible Thursday today. Of course, on the back of the Trump tariff news that has spooked the markets. In fact, on the Nifty, we have broken below the 12-week low for the Nifty 24. 397 was the 12-week low, and we've broken below that right now. Also, on Nifty Bank, we have broken below the 10-week low of 55,037. So we've broken below that on Nifty Bank as well. If you look at the market cap erosion, it's a market cap erosion of almost 5 lakh crores for the BSE listed companies. In fact, as far as the Nifty is concerned, we have just almost 3 constituents that are in the green. Barring that, all the other constituents are in the red. In fact, heavyweights that are really dragging the index down are Reliance, ICICI Bank, Infosys, M&M. These are really weighing on Nifty. In fact, Adani Enterprises and the Adani pack is also pulling the index down. So right now it is, a common consensus of the market tilted in the favor of declines. Broader market seeing sharper cuts, both mid and small caps trading with cuts of almost 1%. So it is indeed a terrible Thursday that's coming in. Deep cuts coming across D Street as of now, Ashesha.
Well, absolutely. Across the board, broader markets continue to remain under pressure as well. But let's get going, Ankita, with all the stocks that are buzzing in trade today. And to discuss that on the technicals, we are now joined by Mr. Akshay Bhagwat, Senior Vice President, Derivatives Research at JM Financial Services. And on the research desk, Kanishka, as always, is joining us. But first up, let's talk about BHEL, and it reported its numbers very weak set, because of which the stock is sitting with a cut of nearly 6.5% as we speak. In fact, revenues were flat on a year-on-year basis, but as far as losses are concerned, that has widened to nearly 456 crores. A loss of 211 crores that the company had reported same time last year. Clearly, the street is not happy with the kind of numbers that it has reported, and that is the reason the stock is sitting with deep cuts today. Nuvama, they are maintaining their buy stance, but they've also lowered their target price from 360 earlier to 335 now. They're saying it was a weak quarter across the board, but they are retaining their buy stance, and the ongoing streak of fresh orders reaffirms their thesis of thermal revival going forward. But all in all, it was a very weak set. Losses, in fact, have doubled on a year-on-year basis, and that is the reason we are seeing that sharp downtick on BHEL today.
The sharp downtick coming in on BHEL with cuts of almost 6.3% coming in. But besides that, Akshay has picked out L&T for us, and that counter is also down and out 0.5%. But of course, it's the the market trend that's really playing out. But L&T. On the fundamentals, L&T is a strong counter. The results have been good. The outlook is also good. But on the charts, what do you see for L&T?
Good afternoon. So if you recollect, L&T had a very strong gap open a few trading sessions back post its numbers. And after that, with the rough patch in the market, the stock has been kind of consolidating in a sideways range, 3560 being the lower base of this range and 3700 being the upper end of the range. Overall, what I understand is the chart structure is positive still. It is just that we are dealing with a rough patch in the market. But being a strong setup, I think L&T is setting up for a breakout about 3700, after which possibly targets till 3800 and 3550 would be set. So a positive view in L&T can take the trade for targets of 3800 plus.
Alright, so that's the view on L&T on the charts. But moving on to the next counter, and that is Bajaj Auto. Now remember, Bajaj Auto had come out with its number yesterday during the market hours, and all the numbers were slightly above what we were expecting. But we also had con call that happened post market hours. Let me take you through the highlights of the con call. Well, as far as the domestic business is concerned, that looks good. For FY26 outlook, the management expects the domestic market to grow at 5 to 6% in FY26, with the 125cc plus segment growing at a faster rate, expecting to outpace the industry growth in 125cc plus segment. Now, the commodity outlook for quarter 2 of FY26, they feel that commodities such as aluminium, platinum, copper and rubber are seeing price increases, and the management is confident of offsetting the commodity inflation through cost saving and calibrated pricing. And the margins are expected to trend at a similar level of FY25 due to currency tailwinds. As far as the market share is concerned, it is experiencing experienced a loss of market share in the period of Q3 of FY25 and the early parts of Q4 of FY25. Sequential improvement in the market share in Q1 of FY26 by almost 3% in the 125cc plus segment can be seen, resulting in an overall market share of 15%, which is a slight improvement sequentially over Q4 of FY25. On the exports, they are expected to grow at between 15 to 20% in the coming quarters. But besides that, we also had Nuvama that has come out with a note on Bajaj Auto, and they're maintaining a target price of 9,400 and maintaining a buy rating. On the back of that, Bajaj Auto is in focus.
Okay, but let's keep it going with the auto sector then. Apart from Bajaj Auto, TVS Motor, Akshay, you've picked up this stock for us. Tell us on the technicals, what do charts indicate for this auto counter?
Yes, so in the auto space, if you look at the price structure of TVS, last few trading sessions, the stock has seen a one-way rally from levels of 2765 to 2965 where it currently trades. We are dealing with a very pivotal resistance zone. There have been multiple times that the resistance of 2965 has taken its effect and seen the stock cooling off post testing the resistance. This is the fourth or fifth time breakout is attempted, and going with the price volume action, my sense is that the stock should break out and target around 3200 plus. So a positive view, and the momentum will catch in once the level of 2965 is taken out in TVS Motors, post which you might see targets till 3200.
All right, so that's TVS Motors on the charts. But coming to you, Kanishka, an earnings candidate that's set to report its Q1 earnings is Cummins India. Tell us what can be penciled in as far as the Q1 results are concerned.
That's right, Ankita. It is in focus because it's due to report its results later in the day. Now, as per our poll, it's expected to report a 12% rise in its revenue to 2,582 crore rupees level. That would be supported by growth in the distribution segment and a low export base as well. Net profit, that is seen going up nearly 9% on a year-on-year basis at that 457 crore rupees level, though it will be down sequentially. Margins, they are expected to compress as well at that 19.7% level from 20.3% earlier due to pricing normalization and rising competition. Meanwhile, the power gen segment, that may post muted growth of around 5% due to high base last year. Key monitorables, they include data center demand, CP, CB4 pricing trends and potential pricing pressures. Now, management's commentary on industrial demand, tariff impact and any revision to the FY26 growth guidance, especially, given ABB India's cautious outlook, that is something that is key to track today.
All eyes will be on Cummins India, but let's also put the spotlight on Fortis then, and the stock is sitting with gains of nearly 3% in trade after it reported its numbers. Numbers were strong. Management commentary too continues to remain very positive. Revenue saw an uptick of nearly 17% on a year-on-year basis. Margins for the quarter gone by stood at 22.6% versus just 18.6% margins that the company had reported same time last year. But as I mentioned, management commentary is very positive. They say occupancy rates rose in the quarter gone by. Higher average revenue per operating bed also rose, and the momentum is likely to sustain for the next few quarters. They expect EBITDA to rise by about 2 to 3% in the coming quarters on the back of better occupancy. And they are expecting average revenue per operating bed to slightly moderate by the end of this quarter. But all in all, very positive commentary that has come in from the management after it reported a very strong set of numbers and margin expansion, because of which the stock is sitting with gains in excess of 3% in trade today.
All right, that is Fortis Health that is in focus. But Akshay, let me come to you for Ultratech Cement. Tell us, what do you see on the charts for Ultratech Cement? We were on the fundamentals, we were penciling in that perhaps for the cement pack there could be a re-rating given the fact that the demand could perhaps pick up. But on the charts, what do you see for Ultratech?
If you look at the chart structure of Ultratech Cement, the stock has seen a breakout a few trading sessions back at the levels of roughly around 12,000. As we see the prices, they have consolidated a bit post the breakout with the moves in the market. So there has been some cool off, but the longer term price structure is still positive. The prices are trading above the short term moving averages of 21 and 50 days. So overall, my sense is till we hold above the levels of 12,000, you can see a momentum regain in Ultratech Cement back again, in which case 12,600 to 12,650 would be the short-term targets on the upside. So maintaining a positive view till we hold 12,000 in Ultratech Cement.
All right, so that's the view on Ultratech Cement. But let's move on to the next counter in focus, and that is Tata Motors. That is all set to report its Q1 numbers today. So let's look at what are we penciling in for Tata Motors. Firstly, we are expecting a decline of almost 60% in PAT on a sequential basis and a 40% decline coming in on a year-on-year basis. As far as the revenues are concerned, we are seeing we could see a 17% decline sequentially and an 8% decline on a year-on-year basis. As far as the margins are concerned, the margins are estimated to be around 10% from for an estimate versus a 14.4% in the last quarter on a sequential basis. As far as the EBITDA is concerned, we are expecting a downtick of almost 40% on a quarter-on-quarter basis. Now, besides that, the JLR volumes are down 10% on a year-on-year basis and 21% on a sequential basis. The CV volumes are down 6% on a year-on-year basis and 19% on a sequential basis. Also, there are a couple of things that we need to watch out for. The JLR strategy under the new CEO, the JLR India, CV demand and the margin outlook, and the commentary coming in on tariff. These are the things that we need to watch out for as far as Tata Motors is concerned. But before the results, the stock is reeling under selling pressure of more than 1.5%.
All eyes on Tata Motors ahead of its results. The entire sector, of course, is under pressure today. But let's also put the spotlight on big boy Reliance Industries then. Akshay, the stock is down 1.5%, but that is largely in line with the broader market movement. On the technicals, where do you see the stock headed from the current level?
Yeah, so if one is keen on bottom fishing one of the high weighted stocks of Nifty 50, then I think Reliance would fit the bill, considering that in the last 5 weeks we have seen a one-way fall from 1550 to 1375. So it is nearing an important technical support zone, which is around 1350. The short-term momentum indicators are highly oversold and are suggesting that a turnaround in terms of a bounce back might just be around the corner. So in wake of all these points, I think one can look for bottom fishing opportunities in Reliance around the levels of 1350 to 1370 zone. A recovery should see the stock moving way back up till levels of 1425 from a short-term trading perspective.
All right, moving on then from Reliance. The next counter that is in focus today is Bharti Airtel. Kanishka, you picked out Bharti Airtel for us. Take us through what are the brokerages saying on the Q1 results that for Bharti Airtel?
That's right. So brokerages are largely divided. The company did report in an inline set of numbers with strong free cash flow generation and a decline in net debt, which is a key positive. Now, some brokerages, they remain bullish. For instance, Antique Broking, that has raised the target price to 2,222 rupees, citing expectations of record FCF, an ROE above 20%, and another potential tariff hike in FY27. Meanwhile, Motilal Oswal, that sees continued momentum in Bharti Airtel, lifting its target price to 2,285 rupees with a 14% revenue and 17% EBITDA CAGR forecast through FY28. However, Avendus, that has maintained a reduced rating on the stock with a much lower target of 1,370 rupees, flagging risks from rising competition as VIL and BSNL, they have stepped up capex and potential subscriber shifts at the lower end. That's what the brokerages are saying. The stock is weak and is down about 0.7%.
Okay, so Bharti Airtel under pressure on the back of that news, and brokerage houses continue to remain divided after its first quarter results. But also, let's put the spotlight on a whole host of textile counters that remain in focus after US President Donald Trump yesterday levied initial 25% tariff on India. We have Gokuldas Export. That one is reeling under pressure, although it has recovered from the lowest point of the day, absolutely flat as we speak. But remember, India is the 6th largest exporter of textiles and apparel to the world. So any kind of tariff announcement that comes in from global markets continues to weigh heavy on Indian textile industry. Major textile and apparel export destinations for India are US and EU, and both of these nations totally contribute nearly 47% share in total textile exports from India. So we have Gokuldas Exports, which remains impacted on account of the tariff announcement that came in yesterday. But as I mentioned, it has recovered from the lowest point of the day, absolutely flat as we speak.
All right, with that, it's time for us to slip into a short break. Don't go anywhere. After the back, we get you more buzzers. Stay tuned. Welcome back. You're tuned into Market Fatafat, where we are getting you all the buzzers in the trading session. And well, Akshay, you picked out Maruti for us today. Maruti is one counter that hasn't really done anything in the last 6 months. It has been in a I would say a range-bound corrective sort of a phase. From here on, what do you see coming in on for Maruti on the charts?
Yeah, I absolutely agree. Maruti has been in a very conservative price range. It's been trading in a very tight range. You can say 12,100 on the lower end and 13,000 on the upper end. And I think it's time that the stock might see a strong breakout move happening very soon. The breakout move is about 13,000, but the sense is, looking at the price setup, it's in an accumulation stage right now, and I will bet big at this given point of time before the breakout, where the breakout should reward me with targets of 13,200 plus. So with the support of 12,200, the recommendation is that Maruti should break out about 12,800 for potential targets till 13,200.
13,200, that's the target on Maruti Suzuki, but let's keep it going with auto and auto ancillary stocks. Then Bharat Forge, Kanishka, you have picked up this stock for us. What is the news flow here?
That's right. So Bharat Forge is in focus today because of a key restructuring move and mixed brokerage commentary as well. First up, the company has approved the transfer of its defense business assets to its wholly owned subsidiary, Kalyani Strategic Systems, for 453 crore rupees under a business transfer agreement. Meanwhile, brokerages, they are reacting very cautiously to the company's Q1 performance that we saw yesterday. Now, Nuvama, that maintains a hold call with a revised target of 1,280 rupees, flagging a soft Q1 and muted outlook for core segments like CVs and global construction equipment. Auto exports, they are expected to grow just about 1% CAGR over FY25 to 28. Aventus, on the other hand, that remains more optimistic with an ad rating and a target of 1,180 rupees, citing stable margins, improving overseas utilization, and a strong 9,500 crore rupees defense order book, which are the key positives. So now the focus shifts to management strategy for underperforming global operations and evolving tariff headwinds that this particular sector is seeing. Like we can see, despite an overall negative market, the stock is currently holding up well above about 1%.
All right, so moving on then to the next counter, and that is Divi's Lab that is in focus today. Divi's is in focus on the back of a brokerage note that Nuvama has come out with. Now, Nuvama is maintaining a buy call on Divi's Lab, and they set the target price. In fact, they've cut the target price to 7,110 rupees from an earlier 1,225 rupees. They feel that the Q1 of FY26 numbers have missed the consensus estimates, and Divi's nutraceutical business has returned to the growth path, but it has failed to show up materially on the profitability part. Now, they've also saying that the vascubital and the Vastril generalization can be near-term a growth challenge coming in for Divi's Lab, but they're cutting the FY26 cutting FY26 estimate EBITDA and PAT by 7% due to the miss on the numbers in Q1 of FY26. On the back of that, they're cutting the target price. Motilal Oswal has also come out with a note. They're maintaining a neutral stance, and they have also cut the target price for Divi's to 6,320 rupees. On the back of these downgrades coming in, Divi's Lab is reeling under selling pressure of 0.5%.
But has recovered from the lowest point of the day. But one other stock which has recovered from the lowest point is HUL, this FMCG major. What do you see on the charts for this one?
To recollect again, post the results, there was a very strong momentum surge which saw the stock getting past 2,700. But on the same day, there was a profit booking round, after which you have seen the stock kind of stabilizing around 2,500. I believe, looking at the broader chart pattern, the stock has managed to overcome the resistance of 2,500, trying to build a small support now around 2,480, 2,500 before it regains momentum again. So the sense is, looking at the broader price pattern, the volume action, HUL should recover above 2550, and potentially you can look forward for targets till 2650.
All right, so that's the view on HUL. But coming to you, Kanishka, Tata Steel. Tell us what's the news on Tata Steel.
Right, so Tata Steel shares are in focus today after the company acquired the remaining 40% stake in TSN Wires company through its subsidiary Siam Industrial Wires yesterday. Now, with this move, TSN Wires becomes a wholly owned foreign subsidiary of Tata Steel, strengthening its presence in the Southeast Asian wire solutions market and aligning with its global growth strategy. Now, the street is now watching for more details, more clarity on the deal's strategic impact and financial contribution that it will have on the company. So that's the news flow for Tata Steel. The stock is currently trading about 0.1% higher.
Okay, so that's Tata Steel for you, but let's also put the spotlight on Gujarat Gas, and it reported its numbers. It was a weak set because of which the stock continues to reel under pressure. In fact, we have Motilal Oswal. They are maintaining their buy stance, but they've lowered the target price to 500 versus their earlier target price of 555. They say near-term pressure is likely to persist going forward. Volume uptick will be crucial from the next quarter onwards. Industrial volumes, meanwhile, are expected to remain under pressure for the next few quarters, and they are saying that they are cutting their INC PNG volume assumption for FY26 and 27, and they've also cut their estimates by 8 and 9% respectively for FY26 and 27. So weak set of numbers. Brokerage houses too are not very positive. That's Gujarat Gas for you, down nearly 1.5% as we speak.
All right, with that, we are completely timed out on this edition of Market Fatafat. Akshay and Kanishka, thank you so much for taking the time out and taking us through all the buzzers. But Ashish and I will take a leave. Thank you so much for coming in, for tuning in. Closing trades will take the market action forward, so stay tuned.